Here's the one number that won't grow anything, and that's a zero, a big fat zero. I find all these financial topics exciting, but man, when we're talking about investing, it's a big time one. Today, we're going to talk about investing for beginners. So if you're a beginner investor, which is where a lot of people are at, we're going to help you get started and give you a practical guide for building wealth. Now, it's important as you think about investing, I want to dive right into it. Here's the one number that won't grow anything, and that's a zero, a big fat zero. If you multiply any number by zero, it's always just going to be a big fat zero. And so if you're not investing anything, you've got to just get started. That's my first thing I wanted to share with you today is to get started. It's the Nike logo. Just do it. You got to get started. But Joe, I don't know anything about investing. Investing terrifies me. There's risk. It might lose money. And I would tell you all of those things are real. Those feelings of risk are real. The reality that it could go to zero is real. All of that is real. But the one fact remains that if you do nothing, you will stay at nothing. And so I really want you to get started. Just open the account. Now, listen, I'm a man of action. I like to see people take action. So I really encourage you, open an investment account. Now, in this case, I'm talking about investing in stocks, bonds, mutual funds, CDs, and the like. You can do that through a brokerage account. Now, my favorite, I have several favorites, but my most favorite is Schwab. I am not endorsed by them. They should pay me money, but Charles Schwab. That's spelled S-C-H-W-A-B. You can look it up in your App Store, Google Play, Apple App Store. Type in Schwab, S-C-H-W-A-B. Fidelity and E-Trade are also excellent. Ally Invest is an excellent one. Robinhood and also Acorns can be good. But my favorite is Schwab. They have excellent research and it's really intuitive user navigation. And so you can open the account. Now, what type of account to open? Because they're going to ask you what type of account. I would encourage you to start a retirement account. A Roth IRA is what I would choose. If I woke up tomorrow and most people choose, I would open a Roth IRA if I was earning some level of income. Okay, so you can open this account. And the reason the Roth IRA is important is it gives you special tax advantages. You will not pay any taxes on the growth of your investment. And all the way to retirement, you will not pay taxes. So I won't talk about other details because this is an intro. It's investing for beginners. Just know a Roth IRA is really good. You can open it. Hey, listen, even if you type in your information with your toes, I still think you could open your account in about 15 minutes. In fact, this last weekend, I was speaking at a church in Connecticut. And in Connecticut, I had a young lady open an account sitting there right there with me. She opened it in about 5 minutes. And so open the account. Now, the next thing you have to do is you have to make that initial investment. You have to make an initial investment. I always encourage people to invest in a company that they really like the products of, and even better, and more importantly, if they have children, their kids like their products, right? So I remember as I was starting investing, I started investing in companies like Apple, way back when. And I was investing in companies like, Coca-Cola, because I like Coca-Cola and I like their products. And, you can buy into a company. The whole point here is not so much making a pile of money as much as it is learning how to invest. Now, you can start with as little as $5 on Schwab. One of the reasons why I like them is they offer something called stock slices. So you can put in $5 and you'll own a fractional share of about 300-400 different stocks that are wildly traded, very popular, like Target, like, Charles Schwab even. You can invest in Schwab on the Schwab app, which is really cool. Okay, so here's what I would encourage you to do with this initial investment. Set up something that you can afford automatically. So you may be the one who says, Joe, I could invest $100 a month. That's rung number 3 of our ladder, by the way. But $100 a month, set it up automatically on a date of your choosing. Now you may be saying, Joe, I can't do 100. I could do $5 a week. Awesome. Set it up $5 a week. Just do something. Remember, the only number that doesn't grow is a zero. It rhymes, right? The only thing that produces nothing is nothing. So think of it as a farmer. You're putting some seed in the ground in the right season, the right timing, right conditions. It's going to grow and produce a harvest for you sometime later. So just get started. Now, I've got my app pulled up here, and on our website, we have an investment value calculator. And so I'm going to record my screen right here, and it says 3, 2, 1, and it's recording my screen. And what I love about this investment value calculator is it allows me to type in information and be able to find out what an investment would be worth. So let's say an investment grows at 8% a year, and let's say that I have 30 years to invest. So that'd be 360 months. And I'm going to type in the current value is zero, right? We're starting with zero. And let's say I'm committing to put in $50 a month. I hit update and boom, it says, I'm going to zoom in on it, that my investment value in 30 years will be worth $74,518. Now, how much did I put in there? I put in $600 a year times 30 years, 360 months. So when I put that together, that's somewhere around $19,600 that I invested, and it's worth $74,000. Isn't that awesome? What I love about this calculator is you can change the percent return. Now, the stock market has yielded around a little over 11% if you calculate reinvested dividends. And if you got 11%, it would be worth $140,000. But let's say you're just starting to invest. Now, over time, you're going to become a better money manager because nothing gets your attention like seeing your money start to earn money, that you don't have to work for all your income. And let's say you realized, hey, I paid off my car and now I can invest $500 a month. Well, $500 a month for 30 years at 11%, look at that number. It's $1,402,260. What I love about it is you can slide to the right there and you can see what it's worth in 5-year increments. And if that doesn't get you fired up, I don't know what will. We're going to leave a link, a direct link. You don't have to fill out any information. We're going to leave a direct link to this calculator. Type in your information. You'll see there's a print button there, and you'll be able to use this calculator to fire you up, to help you just get started, and to help you make that initial investment and see the power of it. Now, here's what I know. For most people, $100,000 is life altering. It's true for me. And I remember when I first started investing, the idea of having $100,000 in an investment account seemed as mythical as unicorns, for real. And in my mid-20s, I started investing. I actually started investing when I was almost 23 in my company retirement fund. And I ran some numbers in an investment value calculator, and it was almost unbelievable, almost like seeing, Sparkleberry unicorn. I don't know if that's a name. My daughter would correct me right now on My Little Pony, but it was as mythical as that. Here I am, age 49, recording this podcast. I can tell you the numbers are true. I've been the beneficiary of the world's greatest economy. You can be a beneficiary too by investing in stocks, bonds, mutual funds, index funds, and ETFs. Now, you may be just starting out and you're talking about what are those things. In the last minute that we have here, as a beginner, I want to explain what these are. Stocks are partial ownership of a company. If you own a share of Apple, you actually own a portion of the company of Apple. And as they are profitable, you will reap a dividend that they pay out to their owners. And since you're a shareholder, you get it. And as the company grows in value, your stock will increase in value. The same thing with bonds is that it is related to the company, but bonds are debt that is owed by a company. So if you own a bond, a U.S. Treasury bond, you hold U.S. government debt. If you own Apple bonds, you own bonds that are debt that is owed by Apple. A municipal bond is common, where a school goes to build a new building and they issue debt, municipal bonds to the citizens, and you can be paid interest over time as that building is paid off. Okay. ETFs are exchange traded funds. And so they're based on sectors or based upon locations like geographical. They can be target retirement funds. They can be based on an index. And so I encourage you to learn a little bit every week on investing. And you, my friend, will soon not qualify as a beginner with investing. You will become an advanced level investor. And when you become that, hey, search out our other podcast episodes related to advanced investing topics like real estate and more complex strategies such as CD ladders. Hey, it's an honor to serve you. You can do this. Remember, the only number that grows nothing, that's right, is nothing. Let's get started investing. Have a great week, everybody. We'll see you next Monday. Hey everyone, Joe Sangel here. Thanks so much for watching this episode. Hey, I encourage you to check out our other videos that are available here. If you like this, hey, every single week we're producing new content that is to help you with right now relevant information. So make sure you click one of the links and check out some more of our information. I think you'll be so glad that you did. I know your wallet will be glad you did.